This is Steve Tomlinson with Bright Path Mortgage. I'm here at our corporate offices in Ashford, Dunwoody. Hope you'll take a couple minutes and watch this quick video. All right, thanks for the tour. Let's take a look at our conference room for just a minute. Hey, this is Steve Tomlinson with Bright Path Mortgage. I want to talk a little bit about interest rates today. We've seen a lot of discussion with the Fed. We've cut half a rate. They've been meeting. They're concerned about the coronavirus. But what they're really doing when you say they're cutting half a point, they're cutting what they call short-term interest rates. So the prime rate, which is tied to second mortgages, went from 4.7 down to 4.2. And like I said, that affects second mortgages, short-term loans, credit cards, etc. But I'm here to talk about long-term interest rates and what affects long-term rates. And if you guys will look up what they call the 10-year treasury, there's a direct correlation between the 10-year treasury on interest rates for 30, 20, 15, etc. So here's a graph I took from my own phone. The symbol is TNX. I took a 1-year sample, and back then the 10-year treasury was almost at 2.7. Interest rates were about, just a guess, about 4.5. Now these things have trended to today to below 1%. So we're looking at interest rates today, a scale falling down to right about 3%, 3.125. Do I see them going much lower? I don't see things going a lot lower for purchase business because the feds have to cover certain thresholds and banks do. But you may say 2.875 pop on. But what you guys can do as realtors is on your standard phone of any kind, you can pull up your stock symbol. You can put in the symbol TNX and you're able to see this graph that I see as well. So you're going to get a good trend of where interest rates are going if you're concerned about them going up or down. You can look at that directly on your phone. So with Bright Path Mortgage, remember, we don't charge any lender fees like origination, et cetera, We give you a free float down. Imagine if your client 3 or 4 years ago paid a bank credit union $3,000 or $4,000 in discount, origination, whatever you want to call it, to get a rate, let's say from 4.25 down to 4%. Now interest rates are in the low threes. So what's happened? They've just wasted that money. That's why we don't charge those fees. So we've been in Atlanta for 30 years. We can do purchase transactions very, very quickly. You want to get somebody that has control of the process, can go from an pre-approval all the way to funding your loan, sending your docs out. I want you to give me a call. Steve Tomlinson, thanks for watching.